Trader worth the risk here with the crypto collective, and just want to do a bit of a Saturday night update for you guys because Bitcoin is coming to a really interesting point at the moment. Now, I know a lot of people are bearish right now, which is fair enough because I know they're looking at this 1 month candle here, and it looks, it looks pretty bad. It's we moved almost 50% down in one candle, so totally understand why people are bearish, but as bad as this candle looks, if we zoom out like this in the larger scope of things, we really don't know. This could be just a small candle for the next large one up. We really don't know. So I always try and keep an open mind with this stuff, even though the candle is huge and it looks bearish. I'm actually going against the grain here, and I'm bullish. And I think we have a high probability of some upside from here. And the reason I think that is, well, I'm going to go over this idea. So for those of you who have been following me for a while, I posted this in January, and this is probably one of the best charts I put up, or one of my best calls, I'd say. And I picked pretty much the bottom where I thought that Tesla was going to start buying in. So this was back in this pattern started around January the 21st. So I'm just going to bring up the chart. So this is on my trading view, worth the risk, the original idea, and I was expecting the price back then to put in what's called a Wyckoff re-accumulation pattern. So it's almost looks similar. It's pretty much a bull flag pattern is made up of a Wyckoff re-accumulation usually. So all it is I'll show you guys on the chart now. So this was my original chart. So you can see that back in January, we had a really strong run up, and we had the first sell off and the first rejection here. And that usually creates the start of the Wyckoff re-accumulation or distribution or whatever. There's a few different Wyckoff patterns, but most of them usually start with, if you're looking at a distribution or re-accumulation, you have a run up and then you have the first pullback, and that's called the preliminary supply. So that's the first kind of strong sell-off you see. And what that does is that creates the bottom of the trading range. And then from the first sell-off, the PSY preliminary supply, we have the next run up, and then we have the rejection, and that creates the top of the trading range. So as you can see back in January, this green bit was my prediction of what I thought it was going to do. So you can see we come up to this area, we form the top, we form this bottom resistance here, and then we started to kind of like swing between this area. Well, when I saw this, like it just looked really familiar. Like you've got a sort of similar structure here and here as well. And in a bull market, the market just keeps painting these re-accumulations over and over. So they can be quite easy to trade if you know how to recognize them. And the idea behind this Wyckoff re-accumulation, this is re-accumulation schematic number 2, is that the trading range is formed, as you can see in the diagram here. The price starts to swing kind of between it, and towards the end of the trading range, we should see the price fall underneath this key support, and it usually makes like a really quick V bottom or like a double bottom, and then it comes back into the support and it bounces, and that is the sign uh, that the price has a likelihood of coming up to the top of the range and pushing for a breakout like so. And the reason, the whole methodology behind this Wyckoff accumulation is that the large players in the market, for example, whales, people who own like extremely large amounts of Bitcoin, like 1,000 Bitcoin wallets and even more stuff like that, they can't just buy in. Like if they were to buy right now where we see this green candle, like a big player, if they want to buy $1 billion of BTC, just as an example, if they did that right now, it's highly likely if they tried to do that via traditional methods that before they even filled their buy order, the price would already skyrocket up to 40K because other traders are going to see the purchases, the on-chain metrics, the news will start to spread, people start to get excited. So they'll end up buying at a higher price than they actually want to. So they use these trading ranges and they define an area like so. And, people speculate on each side of the trading range. They get short up here and they get long down here. And the idea of this Wyckoff free accumulation is that you can identify patterns where these big players trick the average person. Sorry, just a second. You can identify these patterns where the big players, they trick the average person. Just a second. I lost my chart. All right, here we go. So yeah, they create a defined area. People get long and short on either side, and then these big players, they know where their stop losses are likely to be, and they know the squeeze points of the market. So they trick people, and they drive the price underneath the support area, like so. And then all these people that got long here, their stop losses get triggered, and then you might see people that shorted up here, they might take profit, and that creates a kind of moment where the price quickly dips under this area, it goes back inside, and when you see it confirm off this previous support, it usually makes a really good long opportunity. Now, the reason I'm explaining to this to you guys, I'm going to go over now. So as you can see, we create that range, and this was in towards the end of January. We finally lost that support area. As you can see, we went underneath the range. And I remember at this moment, there was a lot of people that were extremely bearish. They were calling for it to dump like back to 20K and stuff like that. I was bullish here. I was expecting, because there were at this time in Bitcoin's history, there was so much bullish news. There was so many new buyers coming in like PayPal and Michael Saylor. So I knew we had a strong likelihood of going up. We lost the support area. And as you can see, once we confirm back inside of it here, that's when things really started to get interesting on Bitcoin. We've seen Tesla, he placed Bitcoin in his Twitter bio, and then we've seen Tesla announce the purchase of $1.5 billion of Bitcoin, and that gave us the run up to 64K before we had the massive sell off, which leads us to right now. Now, why is this important? Well, it's important because this pattern at this area down here was actually the area that Tesla brought $1.5 billion of Bitcoin. So I've done a bit of research into it, and if you calculated $1.5 billion of BTC at that time, the average price would have been around 34,200. So now that I've explained that to you guys, I'll go over the current chart on BTC. Here we are. So I've marked that average buy area on Tesla. As you can see, it actually lines up quite well with that chart I just showed you, the Wyckoff re-accumulation from January last year. So now that we've seen that, we can see that the price has landed right on the same area that Tesla got an average buy-in of 43,860 BTC for 34,200 each. We've landed pretty much right on that area. You can see earlier we had this Wyckoff distribution here, and we started downtrending pretty much straight down, and we finally stopped at that same area. So I don't think that's a coincidence. I definitely think that we're seeing some more buying down here. And I think eventually we're going to see the price turn around from here and bounce right off this previous Tesla buy-in point. Now, what am I watching for here for a potential bottom? First of all, it already is starting to look positive to me. Like I know it could be like we're starting to make lower highs. As you can see in the bear market, we continuously put a lower high. It goes up, and each time it swings down, each consecutive high is lower. So we're still continuing to do that at the moment on Bitcoin, which is definitely not a good sign. But I don't think it's anything to worry about just yet because, as you can see, we're still above this potential Tesla buy area. Even if we lose this area and we go underneath it quickly, as long as we come back inside relatively fast, I do expect us to have a kind of a push up here eventually. Now I've got my full levels chart here. So if you're wondering, like, I know for some new guys, it might be a bit confusing. Like, how do you understand the chart with so many different things on it? Well, that's why I color code my charts. So if you go onto the monthly chart, you can mark out each particular, you draw a box from one level to the next and you mark them out. So I've got the red areas as important areas where the price actually sold from. So you can see we came down from here and here and up here and up here. So I've marked those areas in red. So I know previously we had a lot of sellers come into the market from those areas. Just like here, I've got these areas marked in red. And you can see when we come back up to that area, we started to sell off a bit. So that's why you keep these levels on your chart. So I've also got the green areas, which is just different support areas where the price started to increase from. And the smaller the area, it just means that there was a smaller kind of reaction or it was on a smaller time frame. And other areas, I've got blue and gray lines. They're just random kind of areas of the smaller time frames. They're not going to be so relevant right now, so I haven't color coded them or anything. So I've marked out these key kind of areas on BTC, and you can see the Wyckoff re-accumulation from this idea here is over here, and we've just started to come back inside of this area again. So if you follow me and you follow a lot of my ideas, you know that I use a lot of Wyckoff charting. And I'm just going to bring up an image right now just to give you a really basic understanding. So this is the conception of primary market phases, and it's really simple. When the markets move up and down. So I'll just clear off my chart. So let's just say this is the market. The market moves up and down. Just like you can see on Bitcoin right now, it's gone up and it's come all the way back to where the Tesla bull run started from. So, let's just say this is the Tesla buy and this is where we are here. So this is a full market cycle to me. That we had the accumulation here, we had the massive $30,000 run, and now we come back to the starting point. So in a market phase, the way it works is, I'll just type it out on the chart. So the top here is actually the point of maximum risk if you're looking for a long trade. And if you're looking for a long trade, the bottom of the market cycle is the point of maximum financial opportunity, and the top of the market cycle is the point of maximum risk. Unless you're a short trader, then it's the opposite. The bottom is the point of maximum risk, and the top is the point of maximum financial opportunity. So why is this important? Well, if you can identify a market cycle, for example, I identified the start of this cycle. And if you were following me, I also called the top recently with my Wyckoff distribution call, and I called the top of the cycle. And now we've come down right to the beginning of this. Now there's still a larger cycle. This is the beginning of a cycle here, but I'm considering this what I call a micro cycle, so a smaller cycle in the greater trend, because this was just such an important area. I think it's very likely that we have a chance of starting a new cycle here. So as you can see in this image, we've start the bottom of the cycle, which is the point of maximum financial opportunity accumulation, and we run up This is called the markup phase when it grows really fast. In the markup, we have the re-accumulation, which is these kind of patterns that I showed you earlier. And then that leads to the re-accumulation can just keep going. You know, you can have 5, 10, 20 re-accumulation patterns in a row. It depends on the market, the conditions, how bullish it is. There's no actual set of rules. Like some people use Elliott waves theory, and you know, each pullback in the Elliott wave could potentially be a re-accumulation until you get to the fifth and final wave, which will lead to the distribution. So after you have distribution, which is the top of the cycle, we enter the fast moving downwards phase, which is the markdown phase. And in markdown, you have redistribution, which is the opposite. So, you know, we have accumulation down here, re-accumulation, that leads to distribution, and then we get redistribution until we get to the bottom of the market cycle. So right now, looking at Bitcoin, to me, it looks like a really great example of this, you know. Let's look on the 4-hour chart, and I'll clear out my levels. So really simple levels here. So I'm going to consider this down here. I'm going to consider this down here an accumulation. You know, this is where Elon Musk started buying. There was a lot of buying attention here. So I'm going to consider that this area down here as an accumulation. You could even consider it as a re-accumulation, which it is, because, you know, we started accumulation down here. We bottomed, we had a re-accumulation, a re-accumulation, a re-accumulation, a re-accumulation. And then we come up and we come to the top. And I know a lot of people are bearish because they said it's a distribution pattern that usually marks the top. And yeah, it does. But what they're not realizing is that this was an accumulation. So this was actually the start of one trend, micro trend here. So I believe that we're going to start again down here, another accumulation phase. And it's already starting to go sideways. It doesn't look like, no, we downtrended really fast here, like just straight down almost. And this is the first time the price started to move away from going straight down. Like over here, you can see we moved down, we moved a little bit away, but we went straight down again. So this is the first time we sort of started to move a bit more sideways. So I think that's a good sign for the re-accumulation. The accumulation to happen down here. We also have a lot of buying and a lot of tension from institutions. And there's a lot of volume, especially in this candle that was here. There was quite a lot of volume. So I think it's a matter of time before we see something like this and we start to uptrend again, or we bounce like right now and do it. At the worst, I think we're going to come back down to maybe 29 to 30K down here. But I think if that happens, it's not going to be for very long. So we have the accumulation phase, and then that leads to all these smaller kind of re-accumulations. I'll just put them in purple. This was a little re-accumulation in here as well. And that this led to the massive distribution pattern. So some people, there's two distribution patterns here. Some people were drawing this one here. So they were drawing this Wyckoff here where you have the three kind of drives like that. But I think that's correct too. But to me, the main pattern was this kind of head and shoulders looking distribution. So you can see in this phase of the market, it becomes a heavy selling phase. And now we've had the markdown phase, which is a strong downtrend. So if we can hold this area, then I think it's likely we will have another accumulation here. Now, redistribution is all these little kind of sideways bits where it keeps going down, as you can see. So this is a potential one, but there's no rule. Like, it's a market. The market is, there's people that influence markets and manipulate them, but there's no rules. Like, it's the way I say it is, the market is alive. You can't predict what's alive. You can't predict human emotions. Like, you can predict them to a certain degree, but there's some things you can't predict. Like, I know for a fact there were so many traders, that even experienced traders, that just didn't see this top coming. And I even saw the top coming, but I didn't think it was going to head down that fast. So there's no, that's what I'm trying to say is there's no rules. Everything's randomized. You can find things that work, like, over time. If you test them, they work better than others, but there's still going to be moments in the market you just simply can't predict. And I think that a lot of people are saying it's guaranteed to go to zero now because this was a distribution. But there's no rule that says a distribution can't be rejected. There's no rule that says a highly influential person such as Elon Musk or banks or whatever can't make a distribution just to get everyone to sell, to make a quick accumulation to go back up. There's no rule that says that's not possible. So I keep an open mind here. I watch for the signs. There's already a few clues here that are showing me we have a chance to start going up here. I'm just going to bring up my levels again. And I'm going to go over my final kind of prediction for Bitcoin here. So here we go. So going back to the Wyckoff schematics and the Wyckoff accumulation, I explained to you guys how the point of maximum financial opportunity is at the bottom of the cycle. So we've already had a massive blow off top. Let's look at the monthly chart. This is even better for me looking at it like this, because you can see we got a little order block here. From that order block, we started the massive run and we come right back down to that area. So do you see Bitcoin coming all the way down to here, 3,800, to start a new cycle? I don't think so. I think this is the start of the micro cycle here, and we've got a high chance of going up from here. So let's look at this Wyckoff accumulation pattern, a potential Wyckoff accumulation pattern. So this is the schematic here. This is a Wyckoff schematic number 2 accumulation, and in this schematic, it's basically called like a gradient of a rising bottom. And in this idea, what happens is, in a normal accumulation, you kind of have a sideways movement like so. I'll just change the color on that. You have a sideways movement like so, and towards the end of the movement, the price quickly goes underneath it, comes back inside before moving upwards from there. That's accumulation schematic 1. In number 2, the way it works is, what happens is, instead of coming underneath the support at the end, it creates the range and it just gradually goes up from there, so that it doesn't make it doesn't come underneath the area like the previous one. So I've got 2 images here. So this is the traditional accumulation. You can see the price moves sideways between the 2 defined areas, and towards the end it kind of touches and goes underneath the area before moving upwards. And this is the second accumulation, where sometimes it just makes a rising bottom. It almost looks like an ascending triangle pattern, and it never goes underneath the support again. All the people trying to short, they're getting bearish. They're trying to short, but each consecutive time they short, it's getting brought up by big players. And then we can see the price eventually break out of this trading range. This is another image of the same schematic. In this one, there's towards the start of the pattern, we see the price go underneath the support area briefly. And this is basically the formation of a inverse head and shoulders pattern. I'm going to bring up a chart in a second just to explain this to you guys. All right, so I'm going to show you two really quick ideas. So this is it's one of my favorite calls that I've made, one of my best charts, I'd say. And this was from April the 20th. I posted this for our private Discord server. So if you want access to all these charts, now I do post quite a lot of them for free, but if you want access to my private charts, which I don't share publicly, I actually document and journal every chart I draw. That's why I'm so good at recognizing these patterns, because I've been studying them for quite a few years and I've mastered identifying them. So this is a traditional, sorry, just a second. This is a traditional accumulation. As you can see, we swing between the horizontal area until we lose it towards the end. Now on Wi-Fi, you can see this exact thing happened. We moved between the two little areas. This was on the 4 hour. This was March the 20th. And towards the end, we come underneath the area quickly. And I kind of expected it to go up from there. So I posted this chart to a Discord. As you can see, that was actually the start of quite a massive run. So as you can see in the accumulation, there's my image, sorry. You've got the 7 spring and the 8 ST, which is at the end, and that starts the massive uptrend. So we did that perfectly on Wi-Fi back then. And then that actually formed a larger kind of accumulation on the 1 day chart from that swing, and then that broke out as well. So that's an example of just a normal accumulation, traditional accumulation. And if you want to see what a rising accumulation looks like, I've got an example for you guys on TRX. So in this example, you can see that it looks really messy, but I was still able to identify this as a bottom. Now I'm going to just open up the chart so it's a bit easier to go over. So yeah, you can see that we come down, we're starting to really downtrend hard, and the final swing is the preliminary support before we form the trading range, right? And you can see we just go between this area until we start to break out of it, and we never go underneath it again. And eventually we find a bottom here and we head up from there on TRX. So that is the exact image here. You can see at the start it makes a bottom, it quickly loses it, and then the next phase is the last point of support where it continually bounces from the previous bounce area. So we create the support, we go underneath, and then we continually bounce from each last bounce area until we go up. So that's just a really rough overview of that's this schematic here. This is a cumulative gradient of rising bottoms. There's another image which is basically the same thing. This is schematic number 2, and in this one it just doesn't. They're the same images. One goes underneath quickly towards the start. As you can see, ST went underneath the thing really quickly, and in the other example, it doesn't go underneath it. So now that I've explained that to you, we've got the chart for Bitcoin here. Just clean up a few little things. All right, so you can see we started to downtrend really hard. The first area that we actually kind of come up from, which was the preliminary support, was here. You could even consider that over here, but it wasn't the greatest example. So I was charting this mainly on the smaller time frames. It can give you a much of a clearer picture when the market's kind of choppy like this. So, we started the downtrend. We first started coming up a bit here, preliminary support, and then we had the selling climax. After that, you get the next rally upwards, which is rejected instantly. And then that leads to the test of the area. and then that creates the horizontal trading range. So that's created the range here. Now, like in this image, ST, we quickly lose. Now, we didn't go underneath this area, but we still had a support here. We lost that. So that's the ST. And then we come back up to that support, and now we should look to find support around here or around here, like so, and then continually bounce like this until we start to gradually uptrend and break above the range. How are we going to know if it's valid if we break out? Well, as you can see in this image, we have the creek, and the creek is like an imaginary line that just goes above each rejection. I'll just clean this up a little bit more. So yeah, you can see that each high, each swing high, like so, each swing, you can see it's just it's not making any drastic movements above this kind of general area. So we can assume that until that happens, it's just going to stay like this or even go down. Now, what's going to be the really good sign for us for this pattern here, this Wyckoff accumulation schematic, is if eventually we do bounce off these kind of support areas, and then we gradually start to go up, and then we do the same thing. We continually bounce off each bounce until we make a gradual lower high, until we gradually make lower highs and see a breakout. Once we get above this area, we need to see what's called a sign of strength. So we should see the price go from here quickly across. That should take us above this kind of imaginary area. And then we need to see it find support over here. And we have a sign of strength before finding support on the previous support. That's LPS is last point of support. So this was the last point of support. This was last point of support. This was last point of support. So you're just looking for the price to go above these areas and then bounce from them and keep going up. And that's going to give you the kind of confirmation that the Wyckoff is likely to play out. So I'm going to go over, just to finish off the video, I'm going to go over one more example for you guys of a accumulation schematic. And I'm going to go over Ethereum really quickly as well. So just to show you guys one more example of a rising accumulation. Here we go. Here's a really perfect example. So don't forget, guys, if you want access to all of these charts and my databases, you can join our private Discord server. I'm going to post a link in the comments. We charge $100 US per month, and that gives you access to my live trading journal. So all of my charts, I tell people everything I'm trading. I give education. I give like motivational posts and psychology. And we also have two other traders in our Discord group. So we have Trader Dax and we have Trader Travis. If you haven't heard of them, they're both pretty well known and sharing quite a lot of good posts and information as well. So it gives you an environment where you can learn from other professional traders. And we also have, this is our server here, the Crypto Collective. So we also have a full education database where you can learn about all these patterns. I used to be a graphic designer, so I've created quite a lot of educational images to help speed up your education in trading and get you on the same level as other people. So this is my chart pattern section, and I also have a section here where I've covered all the Wyckoff education. Most of it is free, but the information on the internet is really outdated and it doesn't explain it to you very well. So if you want something where you can see what a trader is looking at and find the why exactly they traded what they're looking at, then this is for you. So here is one of my charts in my Wyckoff database. Now, this was back in 2018, 2019, and you can see this was a really great example of a rising bottom. I'm not going to go over it really too in depth because I just explained it to you guys. But here we are. So you can see we come down really strongly. We form the preliminary support, and then we just make the trading range, and eventually we start to bottom. We never get underneath it again. So that's what I'm hoping for on BTC. At the worst, we lose support and then come back inside for a kind of ugly inverse head and shoulders. So here's my chart for Ethereum at the moment. Now, I just explained to you guys in the at the start about the market cycles and the market phases of Bitcoin. So that the market goes up and down, and if you're short, you want to get up here. If you're long, you want to get down here to maximize your gains and minimize your risk. Now let's look at Ethereum here. I'm going to look on the 1 hour chart. So you can see back in April, we had quite a large dump. And what I noticed was this was a really great example of like a mini cycle, like a cycle within a cycle, a trend within a trend. So you can see overall we're in a massive kind of uptrend, but at this area here, I believed we had a micro cycle, just like I explained to you on Bitcoin. So as you can see, we have a sideways movement, an accumulation that starts the markup phase. We have a re-accumulation, and that leads to the the distribution, which is like an ugly head and shoulders. That led to a really deep, a really strong panic-driven sell-off. So we had a 22% drop from there. Um, a lot of people sold out. They capitulated. We started to move sideways again to another accumulation. Eventually, we started re-accumulating again until we had another distribution, and that led to a final accumulation here, and that started this massive up move. So my general reading of this is that this is manipulation, most likely manipulation. If it's not manipulation, then it's simply a lot of institutional buyers were waiting down here to buy up Ethereum. So we had this top come in and we had the bottoms where the price, the asset Ethereum was being accumulated for the massive run up here. And then you see the re-accumulations in each kind of area. And that led us to the current price action. Sorry if it's a bit messy. I'll just try my best to explain it in a way you can understand. So you can see that led us to this area up here in red. I'll just clear this off. All right. So that led us to this area up here in red, which is basically the same pattern as this on a micro scale, right? So you can see we had the accumulation. We had the accumulation here, and then that led to the distribution. So what if this here was actually a massive accumulation, which it very well, a massive accumulation or re-accumulation, sorry, which it very well could be, considering there was a lot of buying volume there and we went up from there, right? So let's drag this across, and we've landed right on that same area, and we've had the same distribution up here. So what if this is just mirroring this on a larger scale? So what if we're going to go, I'll just remove these. It's a little bit easier to see. All right, so now we've come back to that area down here. What if, there we go. What if we bounce from here and come and do the same thing? If we follow this pattern that's going to give us an opportunity like this where we're going to have one final buy in and start to paint a rising bottom as well before seeing a potential breakout like so. So that would be just a larger scale copy of this. So in this is a distribution, but this is just a way of forming a much larger pattern. So let's look at it this way. So like Bitcoin, it's got a very strong downwards candle. But what if this was just the beginning of something like this? We really don't know. I try to really keep an open mind with this stuff. What if this was the beginning of something like this? We really don't know. Anything is possible. This candle may look massive now, but in the larger scope of things, it could be a speck. So we really don't know. So I try to keep an open mind. And so far, it's following that little pattern I just showed you quite well on Ethereum. So that's my main idea. But what else can we see here? So I've got these channels here, parallel channels. Now, pull up another image quickly. So I've got another, before I showed you guys a Wyckoff re-accumulation. So that was this image here where the price swings between two horizontal areas and it has a brief moment where it loses that area before quickly coming inside. And that gives us a sign that the market has a likelihood of heading up. So I actually use these on a diagonal scale as well, using the same principles, and it works quite well for me. So you can see we started uptrending. We didn't really have any kind of selling, like strong selling at all. This I wouldn't call this strong because it didn't do anything. We just continued up. The first strong one we had was like here or here. So to me, that could easily be the PS preliminary supply area, the first kind of selling before we see the formation of the zigzag, the zigzag kind of area, right? So we had that area. We bounced off this kind of area, and then we come up. We rejected. We come back down. We bounce. At this moment, you can't actually tell if it's a range. When we come back up and reject it again, and then come back down here and bounce again, then I noticed this and I said, you know what? This, if you look at it like this, it looks very much like a range, a trading range. I trade stuff like this all the time and it works for me, but you have to make sure it's a defined area. You can't just have free touches and say that's it. That's a good trading range. You can clearly see that it's swinging and respecting this area, right? And it continued to do so over here. If you use log scale, you might get a different picture. Log scale just makes the candles, changes the length of the candles so they're more easier to view. If you use log scale, you might get a little bit of a different picture, but to me, I can still see the same kind of trading range. You might even draw it like this. It's not that important. What's important is how the price reacts to it. So the little pattern I showed you is over here. The larger one I think we're making is over here. And now we've actually we've come inside this area, and we've lost the area. We've had a lot of panic. We come back up to it. We lost it again. A lot of panic again. And that's created almost looks like a perfect spring to me, a kind of V, double V bottom. And the way you can tell if this Wyckoff is a valid pattern, well, once the price comes back inside the trading range, so as you can see in this exact moment here, the way it works is they use this range and they use psychology to trick people. Like they know that if the price comes back up to this range like here, and you can see it bounced here, most people are going to see that and say that's a long. They're going to get long there. in a normal scenario, it's probably going to move from here and start to push across. But if someone's manipulating the market and they want to drive the price down, they're going to actually reject the price here. They know that this was such an important area to hold because it was the previous kind of support area, and then they reject that. And then all the sellers come in, everyone freaks out. It comes underneath that area. We've got a redistribution here. We come down again. And then they use the momentum of all the people panicking, all the people trying to sell, all the people just rushing to get out of their positions to buy. And that allows them to buy massive amounts of the asset without the price moving too fast. It's almost like they can buy under the radar, because if everyone's selling at that, the pressure of the selling is going to create an equilibrium with the pressure of the massive buy. So you're going to have a much narrow bottom compared to something like this, which gives people an obvious kind of sign that, all right, this could be the bottom. So now that I've gone over that, you can see we come back under that area after making the kind of double bottom, and then we bounced, and we right off that key. Sorry, not off that kind of area. We bounced off another kind of important support area over here, and now we've come back inside the range, and now we've gone back on this kind of important area, which was the support over here. And let's look what happens. So you can see we had the instant reaction, the buyers come in. It looks like a little re-accumulation down here. If you look at the image, we can see spring. After the spring, it has jumped across the creek. That is where the price quickly shoots. If we've got the trading range, the range is formed. We lose the support spring. And when we come inside, it should go straight across. That's a jump across the creek. The creek is the imaginary line that goes with each consecutive high. You can see we've pretty clearly we've jumped across the creek. Even if you draw it like this and you would say, oh, I want to use this high, you can say we've now jumped across that. So it's a positive sign. So far it looks like the pattern is true. And we've had a sell-off from the top of the range, which is quite normal. If you look at most of these kind of patterns, they usually do have a bit of selling when they come to the resistance area. So you can see we've come off that top area. We kind of look a bit weak now. So what I'm looking for on Ethereum is us to come back down here for a final time. As you can see, we've got LPS. LPS is last point of support. So it doesn't actually have to bounce. LPS can come back to this support area and it can bounce from there. And then we see a proper, a real breakout of the trading range like so. And then we come back, and then that is going to be the secondary last point of support like so. So this was a support. So the fact if we bounce off there, that can give us the final confirmation of the Wyckoff re-accumulation breakout. And then we need to see a sign of strength, which is SOS, sign of strength. And that should show us that we're entering an uptrend. And then it's just looking for each kind of re-accumulation like so until it leads to a distribution. So that's my general idea on Ethereum. I just want to bring up my original chart again. I don't know how messy it's going to be, but give it a go. Let's get rid of some of this stuff. All right, so now that I've cleaned my chart, I've got my really basic support and resistance areas on Ethereum. And now I've got this area marked out down here. You can see there's a purple kind of line, and there's also a red line here. So you can see this was a top here. I'm just going to mark it out in yellow. It's a bit easier to see. All right. Now we can see a bit better. So you can see we've got this little area over here we kind of bounce from a few times. and we also have one down here, around here. Once we lose that, I think we've got quite a large gap from here to here, and then we've got the next area down here, right? So as a general rule, I've got the this area here, which is a bit messy, sorry. If we come down to here, I'm expecting this to be quite a strong support. We can even make like an ugly inverse head and shoulders pattern here. The warning sign for me, the warning sign where I believe that I'm probably going to be wrong about my idea and that this isn't the bottom, is if we're going to do something like this, we're going to lose this area like so. And then people try to get long. We try to make an inverse head and shoulders, but then it rejects it. It goes underneath. And then we come back to this area, which is this kind of blue purple area here, around $2,000 to 1,870, and then we reject off there. If I see that, that's going to be a bit of a warning sign to me that we're probably going to be looking for one more shakeout, and then we're going to see the potential recovery bounce. So that's it for me. Update on Ethereum and Bitcoin. Let's look at one last thing because it's Saturday night. I'm going out tonight, so I don't have too much time left. So this is the Bitcoin dominance, and you can use this as a really great tool to gauge how the altcoin market is doing at the moment. So this is the monthly chart. I've got my rectangle tool, and I just mark out really briefly these previous areas that we bounced from, right? And why is this important? Well, the Bitcoin dominance shows us the percent of the market that Bitcoin controls. So we have 43.72%. So if the whole market is 100%, Bitcoin has 43.72% of the market right now. And why is this a useful tool? Well, obviously, if Bitcoin dominance increases by 10 or 20% in a day, you can assume that 10 to 20% of all the money in crypto is flooding into Bitcoin. So that's going to give you a general consensus that there's going to be a big move. It could be a down move, it could be an up move. It can be either. But as a general consensus, when the Bitcoin dominance is rising, and when it starts to bounce, you should take caution on your altcoins because if the Bitcoin dominance rises, a lot of people they sell their altcoins to flock into Bitcoin. So this can give you a bit of a warning sign. So we after since December 2020, the Bitcoin dominance has dropped from 73%, so 74%, nearly 74% of the market was Bitcoin. It dropped all the way to 39.66%. And as you can see, we had this massive kind of alt season. The last crazy alt season was back in December 2017, like the proper alt season. And as you can see, we rejected from that same area in December, which was around 70% or so. And from there, that gave us a sign that money was flowing out of Bitcoin and into altcoins until we saw the bottom. Now, we've finally come back to that historic area. January 2018, we found a bottom on the Bitcoin dominance, and then altcoins started to get absolutely wrecked as most of the money went into Bitcoin because it was in a bear market. So now we've bounced. We haven't bounced right off that area, but we've bounced off definitely a important support area, and we're right above that now. So if we don't fall underneath this area again, we need to either lose this area and continue down to the 35% dominance region for altcoins to continue to have some increases across the board. If that doesn't happen, we need to see it move sideways like this. That's just going to give us a bit of calm in the market and a sign that while Bitcoin is consolidating, altcoins can move. And then the worst case scenario for altcoins is if we do something like this, we get back above. Sorry, you can see this area here was very important. We started to go up a bit from there, also here. So if we get above this and bounce, then that's going to be a very bad sign for altcoins. Probably manage your risk until you see a strong rejection and another sign that the dominance is heading down. Another thing we can also look at is the crypto the total market cap of this is a total amount of money in crypto, not including Bitcoin. So you can mark out a few key areas, and I've been watching this chart for a while, and I think overall, as long as the total two stays above 470 billion, I think it is. I think that altcoins are going to be bullish. We could have a pullback down here, but as long as we hold that area, I think they're going to be all right. If we lose this area and we reject, it's going to be really bad. If we bounce from there and we continue to push and eventually crack a new high over 1.5 trillion, then it's going to be a positive sign for alts. So that's my overview on the market, guys. I hope you hope you enjoyed the video. Make sure you hit the like and the subscribe button if you want to be notified next time I post. I'm going to be starting to do more regular programming and regular videos because I'm starting to build my brand as trader worth the risk. So I look forward to sharing a lot of content and insights with you guys, and I'll see you on the next video. Thanks a lot.